Yeah, thanks for having me on the show and for asking the questions. Yes, Arabil, it's actually a difficult market. Our customers, and this is as expected, have been cautious in their investments. And we have also seen India normalizing after an unprecedented rollout pace of 5G last year. So with that in mind, we have seen sales decline with organically about 14%. At the same time, what we've done is to work on our cost structure and our commercial discipline, which has allowed us to generate a strong gross margin, 42.7%, as well as a tight cost control, and therefore our earnings are kind of partially mitigating the big decline on top line. We also have a one-time revenue of 1.9 billion that helps the quarter. So you should keep that in mind as well. But it's really the focus on call it commercial discipline, costs, and running the business in a tight way that results in a good margin development.
Börje, despite the cost control, though, you still speak about, sufficient investment across certain geographies as well. I mean, do you still have to continue to do that? And how much do you think would be at play then?
Yeah, we see that the market, and we have said that, will be challenging the whole year. We'll face headwinds simply. And in that environment, we really need to work on what we can control. Costs are clearly an important part. So we need to continue the journey to take out costs. It's not fun. It's not what you want to do, but it's really necessary to have a tight ship because ultimately we need to invest in technology leadership. We need to invest in market leadership. We need to keep those. That's really where we're going to win when the market comes back at some point in time.
Börje, really good to see you again. And look, I appreciate the margin line. I did notice that big improvement year on year because of that cost cutting you've made. But the vicious competitive environment remains on a global basis with those global tenders as well. How much can you hold the line on those improved margins when a lot of your competitors are facing the same competitive pressures?
It's really critical that we work on the parts we can impact. That's in reality making sure we have a competitive product portfolio and work on our cost position. That's really where our focus is, and we're working really hard on that. Of course, that results in us bringing down our workforce, and that's what we announced last week. A few weeks ago in Sweden. That's something we do globally to make sure that we are truly competitive. Then, of course, we need to have commercial discipline and do as well as we can. We could see that in Q1. We expect the second half to actually benefit from what the actions we take on the cost side now, but also, of course, that we see on the back of the large contract win in the end of last year, that sales will start to come back second half.
When I look at the net sales market areas, I mean, there's some pretty hefty declines. You've already referred to India. We've noticed in the copy about the hopes for return to normalization from inventory levels in the States, but we saw an 18% decline there as well. Can we draw a line under these negative figures anytime soon across the globe?
I think what we have said is that we start to see a potential for sales to stabilize in the second part of the year. And that's really coming out of the US market where inventory levels now have come down. We see our contracts starting to contribute on the sales line in the second part of the year. So towards the end of the year, what we see today with the visibility we have and with the trends we see, sales should start to stabilize in the second part.
Net cash flow, obviously net cash, again, an improvement on that as well. Free cash flow before M&A, negative 71%, but again, improvement hopefully year on year. Is there a change in use of some of the capital that you can do, which is going to bolster your shares, Börje?
I guess you're asking about share repurchases. We actually don't have a mandate from the shareholders to do that. So that's kind of out of the question. What we're doing now, we've said that given the market environment, we need to be prudent in the way we use cash, make sure that we keep a strong balance sheet, a flexible balance sheet, and that's what we intend to do.